Clearly, we're in a very unstable environment at the moment, and DB pension schemes, defined benefit pension schemes, many of them are in deficit, and the gilt situation just makes this worse. And many of them may well have liquidity issues and may well pull back on investments into infrastructure. But there's another problem here. Whilst everybody's looking at defined benefit pension schemes, our data shows that there's problems with the defined contribution pension schemes as well, the workplace pension schemes. And we think that there's possibly £6 billion worth of inflows and assets at risk in those defined contribution schemes as a result of the cost of living crisis.
So, Peter, just unpack that for us a little bit more. You're saying people will pull back on voluntary contributions because they simply cannot make ends meet.
I think that that's a very real risk. I think if people month on month are struggling to make ends meet, one of the places that they may increase their take-home pay is to stop their contributions into their workplace pensions. And we identify that there's at least 1 million households in the UK of under 40s who could stop making contributions of £1.2 billion. And at the other end of the pension schemes, you've got the plus 55s who, through pension freedoms, can go into their pension pots and take money out, the first 25% tax-free, to help them meet the cost of living crisis. And that could be another £4.2 billion of assets that's lost to these pension schemes.
Peter, good to see you from the magnificent city of Brighton. I'll probably be down there myself tomorrow. Look, these gilt sellers now, aren't they gilt buyers tomorrow? And when I say tomorrow, I mean over the medium term as well, because the yields are fantastic compared to where they've been over a longer term. This is terrible news, I get, for the DB and possibly DC in the very short term. But if they can get through this cliff edge and these margin calls, isn't this a fantastic opportunity for the pensions industry?
Potentially, yes. I mean, there's a lot of assets to be picked up potentially very cheaply, but I think that we are facing this cliff edge, and it's the uncertainty that's causing the problem.
Who is now causing the uncertainty? And I'll whiz back to the height of the financial crisis, which I think you and I are a similar vintage, Peter. We remember very, very well. And there was a tripartite collapse and a schisms everywhere between the regulatory authorities, the Bank of England, and indeed the Treasury. It's horribly familiar that the regulators, the Bank of England and the Treasury can't get their act together.
I think that's one of the problems. The Bank of England is needing to respond to a situation that isn't in their control. They're responding to it. And it's a matter of restoring stability in the market.
Yeah. Peter, who is the problem with? Our viewers are a greedy bunch as well, and they want to see if they can either make money out of this or whether they need to sell their holdings in certain assets and what have you. Are the major pension funds the problem? Are the people who acted as intermediaries the problem? And is there a differentiation needed between those who provided segregated pension solutions and pool pension solutions? Can we go into a little bit more into the weeds of who we need to look at to see where the problems are?
Well, I think it is a very complex situation. You've identified a lot of players in the market who are involved in this. I think the problem is that so many assets are wrapped up in the gilts for their long-term returns for these pension schemes, and it may be an investment strategy that needs to be reviewed.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.